registration, you're just writing a letter to say, oh, okay, this is my company, these are my CAC documents. I would like to register for taxes and you get an identification number. Very simple. Also, as a person, even if you're not running a business, you should have an identification number, something to show that you are tax compliant in the company or in the country. Sorry. So after you've registered, you should also have proper bookkeeping. So I think Abayomi also mentioned it during the session that it is important to pretty much keep your book, whether you need it now or in 10 years' time. Just have a document depending on the size of your business. You know, there's some businesses that you probably would have to write it in paper. Maybe that's just where you are, and that's fine. So for example, my when I'm doing monthly expenses, I prefer to just put up my notepad on my phone, and I already have everything there. Some people prefer to write, which is okay, but I mean, if your business is getting big, you probably need to deploy some tools to just help you keep, okay, this is how much I've spent, and this is how much that comes in. Even if you don't know how to calculate the taxes, by the time you are giving it to a professional, the professional has something to work with. Not that, oh, I've not done anything. I don't even know how many employees I have. I don't know where they reside. I don't know if I've paid taxes. Or, oh, I think I did. I'm not sure, So bookkeeping is really important. Then the next thing is tax filing and payment deadlines. So all these taxes have deadlines pretty much that you need to be aware of. So after you've registered, you need to pay the applicable taxes via the designated platforms. So for value added tax, you're probably paying it via Tax Pro Max. If you're paying Lagos State taxes, you'll be paying it via their e-tax platform. So they all have their different platforms where you're expected to pay taxes, and you pay within the agreed timeline. So the Internal Revenue Services also pretty much they wait for that penalty and interest. So it's not that you didn't pay, you just didn't pay at the right time. So they might not even come at you that month, that year. They just wait for it to accumulate so that by the time they are getting the interest, it's going to be by the applicable interest at that moment. So that's more money for them. Then you're also expected to file your taxes annually, whether it's a business, whether as a person. So for individuals, the filing for 2024 was March 31st. However, you can still do it. You can still log in. Just go to eTax, log in. If you don't know your login details, if you know your payer ID, just reset password, log in, put in information, and just file so that you can obtain your tax clearance certificate. So after filing taxes, the next thing is to apply for certificates. So it's not just about filing. Filing is pretty much you just declaring that this is the income I earned and this is the corresponding taxes I've paid. The Internal Revenue Services then reviews the information you've provided and they say, okay, this is fine. Then you get your certificate. And the final thing is tax audits and investigations. So if you run a business, you probably would be familiar with this. So this is just pretty much the Internal Revenue Service saying, okay, let us see your books, those books that you've kept. Let's see it and confirm that you've not done anything shady, you've paid the correct taxes, and then we're now signing off to say, okay, yes, this company has paid everything that is required of them. But oftentimes, the way the Internal Revenue Services it comes very hard, and sometimes you're like, am I doing anything wrong? What have I done wrong here? Because the way the letter comes, they'll tell you you have to respond in 7 days. You probably didn't even read the entire information on the letter, whereas the provisions of the law says that it should take you 30 days. But the Internal Revenue Service oftentimes want to do this initial gra. So you should also seek professional, experts if you are not. So somebody can just pick it up. Immediately you get the letter that you don't understand what it means. Just share it with someone who probably has an idea to help you do an objection letter. Okay? So I think that's about it on tax compliance. So best practices for tax compliance. The first thing is you need to understand your tax obligations. You need to keep accurate financial records. File and pay your taxes on time. Leverage technology for compliance. Seek professional guidance as necessary. the truth is that taxes can be difficult to calculate or understand. You don't need to really stress yourself when you can give it to someone who pretty much understands the intricacies, can help you file for reliefs, or help you position your business in such a way that you are making maximum profit that you can make from that business. So, for example, you want to start a business, but you don't know how you should incorporate that business, maybe as an enterprise, maybe as a company, or maybe as partnership. If you are looking to make the most profit, partnership is like the best route, even though that comes with, if you're having like quite a number of partners, disputes and all of that. So there's the legal part. But if you're looking for, okay, I still want to pay taxes, but I want to make the most profit, then, partnership. So pretty much just seek professional advice when making, plans to start up a business. Okay? So we're touching briefly on the proposed tax reform bill in Nigeria. Please, you can jot down questions, so I'll take it after the session. So I'm sure we've heard of this bill, this so-called bill that has been in Senate for some time now, and so many back and forth that it has come with. Anyway, I think the bill will most likely be implemented soon, because there are so many. It's taking shape now than it was initially. So there are four major bills. There is the Nigerian Tax Bill 2024. There is the Nigerian Tax Administration Bill. There's the Nigerian Revenue Service Bill, and there's the Joint Revenue Board Establishment Bill. And it's lengthy, I'll just touch up on the most important sections of this bill. So for the Nigerian Tax Bill, it is proposing to make changes to how personal income taxes are calculated. So previously, the band used to be 7%, 11%, 15%, 19, 21, 24. But now it has been updated to 0%, 15, 18, 21, 23, 25. Pretty much the implication of this is that your first 800,000 is tax exempt. So let's say you make 5 million. The 800,000 first would not be taxed. So the taxes will now start from 4.2 million, pretty much, which makes some sort of sense, right? However, when we now move to the next one, which is 15%, which used to be 11, is now 15. So if your income falls in this category, you probably will pay more taxes in this regard, because your income that previously was initially taxed at 7% and then 11% is now totally being taxed at 15%. But looking at the general provision for this, people earning lesser than 50 million in a year will relatively pay lesser taxes. Relatively, maybe like 1,000 difference or 2,000, depending. But people earning 50 million and above will be paying more taxes by the time this bill is implemented. Okay, so the second one has to do with compensation for loss of office. So previously, compensation for loss of office was taxed at above 10 million. So let's say you are asking someone to leave your company, and for whatever reason, so you're telling them, you need to go or something, but we'll compensate you for losing this office and we'll pay you 20 million. Previously, only 10 million would be taxed. But now they've made provisions that excess of 50 million is what should be taxed. So some companies are looking at, okay, you know what, we'll defer instead of paying you all these, maybe the 50,000 that would probably add to your income monthly, we'll just package it as compensation for loss of office, being that long run, it won't be taxed if it is not above 50 million. I mean, companies too are looking at better ways to reduce taxes, in quotes. Okay, so another section that was implemented is taxing of companies. So previously, small companies were not taxed. That is, companies that their annual turnover is lesser than 25 million, and that remains the same now. However, it has now been the rates for other companies has now been reduced to 27.5% in 2025 and 25% from 2026. Previously, it was 30%. Although I also observed that while going through the section, I observed that they removed medium companies, and medium companies used to be companies between 25 annual turnover of 25 million to 100 million, but they are no longer categorizing medium companies, and they're just calling it other companies. So previously, medium companies were just taxed at 20%. So that means that if your company falls between that, your annual turnover is between 25 to 100 million, you'll be paying pretty much more taxes than you were previously. Okay, so then let's go to the Nigerian Tax Administration Bill, and this is one that has that has a lot of controversy, and I think it has to just do with money. So value-added taxes and how it should be shared. So some governors are of the opinion that, so for example, Lagos State, the states that are making more money, Lagos State, River State, are of the opinion that we are the big guys. People come into Lagos for 30 December. We make a lot of money. Why is our money being shared with other states that are not doing anything? For example, let's say a Kano in quotes, who says they are against drinking beer, but they want to enjoy the value-added taxes that comes from the beer they are taking in Lagos. So there are some governors that are of the opinion that let each state enjoy whatever revenue that they're able to generate. And then we also have the northern states who are also of the opinion that while they might not be generating revenue in terms of maybe big companies, but they supply us food. So if they decide not to produce food any longer, how are these other states going to work or function? So the proposed formula now that everybody pretty much has agreed on is that all value-added taxes will go straight to the federal government. 10% is for federal government flat. Then 55% goes to state governments. 35% goes to local governments, which is impressive because local government used to get 20% and state government used to get 20% also. Then out of this 55% that is now expected to go to state government, it will be calculated based on 60% of what was derived from that state, 20% based on population. So let's say a state like Kano will probably be getting more in terms of population, and then the remaining 20% is going to be equal allocation. So in a way, they've tried to balance it that, okay, even if you are not making revenue per your population and equal allocation, something will still come to your state. But the opinion is that states who are deriving or generating more value-added taxes should still enjoy the benefit of the revenue they are generating. So this is one of the bill. So then the Joint Revenue Board pretty much is just trying to provide a uniform procedure so that administration is the same, whether it is FIRS, whether it is Ogun State, Lagos State. Every process should be applicable. You should be able to go to Ogun State and then it's not entirely different from Lagos State. So that's pretty much what this bill is trying to establish. So there's going to be a board. There's also going to be like a tax appeal tribunal, which we currently have, but the role is to exercise jurisdiction and power to resolve. And then we also have a final office and whose primary responsibility is to just act as an independent intermediary. So if you want to sue LRS, you can sue. So far you have probably a lawyer who would help you to take the case to court. So that's pretty much what this bill is trying to establish. Then the Nigerian Revenue Service Bill is just empowered to assess, collect, and account for revenue accruing to the government of the federation. So this is just to provide like a legal framework for administration of taxes in Nigeria. All right. Okay. So moving to the second part of my presentation today. So I thought about it, and I think that there's a place where you get to where you're no longer bothered about taxes, and I think it has to do with you getting to the point whereby you are earning, I mean, a lot of money to the point that taxes are not exactly, your problem. So I thought about it, and which brings me to the 2030 digital economy agenda. And there has been buzz in the finance space and business space generally as to what the economy is going to look like in 2030 to 2050, and the role taxes will probably play in it, and how we should better position ourselves, you know, for that time. So we've been hearing about digitalization, I think, right from even primary school. At that point, we just thought that maybe digitalization was being able to use an iPhone. We're not even using iPhone then, like a BlackBerry, and not the Palasa, But digital economy right now has transcended beyond just iPhones, and in fact is affecting, or it will affect the way businesses will be done. So I would just like to take us through it. So it just helps you to pretty much better position yourself, maybe as a business owner, as a person, even as a church, and the role that we all are pretty much expected to play. So what is the digital economy agenda? And it is just, digital economy is the economic activities and direct connections between people and technology. So it's pretty much how businesses connections are being made digitally. And this involves a myriad of technologies at play, from internet to artificial intelligence, software, blockchain, amongst many others. By 2030, digital economy is set to redefine the global economic landscape through a fusion of cutting-edge technologies, innovative digital platforms, a new era of commerce and communications. Businesses will need to adapt swiftly to market changes with scalable on-demand digital capabilities. So I would like to go through what we should expect and how to just position ourselves. So the first thing is AI. I think we all know what AI is to some extent, and it the by 2030, where AI is planning to go is where everybody can pretty much access AI to provide personalized solutions. So it does not have to be a particular company or a particular place. You should be able to leverage AI to provide business solutions or solutions to your businesses, basically. So by 2030, that is where artificial intelligence is pretty much going to. So then for e-commerce, and this now comes to we business people doing businesses. So for e-commerce, they are looking at by 2030, you are no longer, it's not going to be business as usual, basically. You're able to do transactions from here and to countries like China without any impediment, pretty much. I should be able to shop in Louis Vuitton and I'm here in Lagos without going to where Louis Vuitton is. So by leveraging virtual reality, integration of augmented reality, and many others. Then the third one brings me to something I'm very passionate about, which is the return of cryptocurrency. And what is crypto? Crypto pretty much is digital money, right? And I've heard people speak about what crypto is or what they think crypto is, and some people say it's the devil box, is this, is that. It's not that serious. It's just science, actually. And the idea or the science behind it pretty much is to be able to have transaction with people without having to have issues with money. So let's say I run, like my sister that runs Agbeke Alasho, and she wants to maybe get materials from China, and China is saying, okay, we don't want USD anymore. We are fighting with USA, so we don't want USD money anymore. And of course, they don't want Naira either. So how so how do you get your materials? So you can say, you know what? Why not I'll create my coin and call it Agbeke coin or something, and or call it Agbex, just make it sound nice. So I will change my Naira or you can change your currency to buy my coins, or I change mine, something like that, and in such a way transaction is done without you using there's no naira issues, there's no US. So that's pretty much crypto. So whilst currently cryptocurrency is volatile and there isn't so much regulation in that regard, but I think it's important for businesses and people generally to understand it, read up about it, and see what you can, pretty much do with it. So crypto is here to stay. I think we all can agree that it is here to stay. So the faster you learn about it, the better you're not left behind, pretty much. So, and I advise people, the first thing to know about crypto is, firstly, what coin would you like to pretty much invest in? And before you invest in a coin, make sure that you read up about the service offering of that coin. So oftentimes people just buy coin because someone says buy XLM or buy XRP without understanding what XRP exactly is. So this example I gave, there is a business which is selling clothes. So there's something there's a service offering in quotes which the coiner rides on. However, we have cases whereby people just create coins to pretty much jilt people. So everybody then pumps in money. They are now using it as gambling, in the sense that by the time I put in money, I just need to wait for some time. When it goes up, I'll now withdraw my money. I don't think that's the mindset anyone should have when going into cryptocurrency. I think the first thing you need to know is, okay, so let's say I want to buy XRP today. What does XRP, or the company that created XRP, what do they do? Who are their investors? And what role did they play in the 2030, or pretty much in the digitalization of the economy? What role did they play? And is this something I would like to put my money into? Then I also advise to not use your regular savings, of course. Should be something like a disposable income, something you can close your eyes 5 years and your heart not be doing big, big. So because it's still volatile, there's still so many things going on in that space that if you don't have an in-depth knowledge, you can just go and buy a coin that would eventually fold up. But I think that this is something everyone should look into. There are even coins. There are Christians that also have coins, that create coins. I was reading up on a coin yesterday, on Jesus coin. The coin is called Jesus coin, and it's used for missions where people just donate, and this particular ministry or church takes the money for missions, basically. So you don't have to be in the US or in UK to contribute into it. So I believe that the way businesses will be done in coming years will be categorized with how good your use of cryptocurrency is. And I think the final one is going to be 5G technology and cybersecurity. So while everyone will start using these, there'll also be an increase in cybersecurity, because you're like, who can I trust? What link can I click on? What app can I use? So if you are looking at right now, okay, I want to learn skills. The skills you should be looking at should be something in this line. Anything tech related, AI related, cyber security is going to be like the gold in the next 5, 10, 20 years. So these are pretty much things to expect. And in conclusion, while the Nigerian government is still contemplating on how they want to tax the crypto space, which is quite funny because the whole idea of crypto is so that it is in such a way, it is independent of the regular traditional banking. So I don't know how they intend to trace transactions to the point that they will tax it. But I mean, interesting times ahead. We would like to see how it will eventually play out. But that's where we are currently. Cryptocurrencies are not taxed, but we'll see where that goes in coming years. So pretty much in conclusion, taxation is essential for economic stability. I think we can all agree. If we all stop paying taxes in Nigeria today, the economy is going to collapse. The government cannot do without our money, and that's just the truth. So it is essential for economic stability. And it is important for every one of us to continuously learn and stay updated on changes in tax laws, as it is essential in navigating the Nigerian tax system. Um, so many things change quite fast, and you might be running a business and you're still probably using 7.5%, and then maybe the night before they already changed it to 10%, but you use the entire 7.5% for the year. They will not say you didn't know that the changes have been made. You pay the difference and probably penalty and interest. And finally, seek expert advice when necessary to ensure proper tax planning and compliance. Thank you. I think I did well with time. So if you have questions, I try to just compact this to give room for questions. I'll be more than happy to answer them. Thank you. Okay.
All right, thank you, Yade. So my question is on tax, well, maybe two questions. So the first question is for, let's say, for example, you're a freelancer and you earn like a gross profit, a gross pay, like, so in that case, you are supposed to remit your personal income tax. Are you the one who determines what is like your cost of doing the work and then what's left? And then you now do this analysis based on that. Then secondly, if you pay taxes and get a tax certificate, do people, like, is there a possibility that there's still investigation or some sort of review of what you've already paid and gotten a certificate for?
Okay. So the first question, so I'm just clear. Your employer, although you're a freelancer, but your employer paid you an income, right? So you are trying to find out how to deduct applicable expenses. So, but because it is personal income tax, you really can't deduct applicable expenses. So it's salary. The salary as, in a way, accounted for whatever expenses you would spend in rendering that service. So on that amount is now what the taxes is applicable. It's on company income tax that you pretty much try to remove. Oh, okay, these are my expenses. This is sales. But in terms of personal income tax, is the income. So, for example, let's say you're underpaid employment. Your employer paid you 2 million. Of course, you are going to transport yourself to, or the employer has figured that you will transport yourself. So we've paid you what will cover both your expenses and, in quotes, the profit you should also make from working with us. So eventually, the entire gross is what is taxed after removing reliefs. So then for the second one, for personal income tax, oftentimes they would have assessed you before you get certificates. So they will check your records. If it's fine, you get your certificate immediately. However, if it isn't, you get an assessment letter where you respond to. If you have to pay, if you are doing back and forth, you get to the point whereby you both are okay, and then you get a certificate. However, for companies, I've seen a situation whereby we got clearance certificate, everything was fine, and then they came back to say they wanted to have investigation. They didn't call it audit. And for them, investigation is that maybe they found out maybe something like fraud happened in the. Oftentimes, it's not. No, they didn't find out anything. They're just looking for maybe more ways to get money. And when they come like 10 years when they know that you probably can't even find those records again. So we've had situations like that, and the companies pretty much just push it on us to figure it out. But our stance is that at the point of auditing this company, you cleared them, so we do not see any reason why they should be investigated. And if you would like to investigate, then show us the proof of fraud that you're talking about, and that's at that point you don't see them again. So that's pretty much. Okay. TWT.
The question online.
Okay.
Let me read it. I'm registering my organization as a non-profit. Does it mean I wouldn't be required to file taxes?
Yes. So, okay. So, even though you are running an NGO, doesn't mean you shouldn't file taxes. Even if it is new, but you're expected to still file taxes and obtain a clearance certificate as an NGO.
Okay. My question is related to the first question that Tira is asked. So in that scenario of being a freelancer, what if I position myself as a contractor or a consultant so that what you're paying me is not salary? I give you a bill. At the end of the month, you pay me. I believe I'll just be subject to 5% withholding tax in that regard.
Okay,
Right.
so it also depends on how the contract is coined. So if it is coined as professional services, then WHC is what would be that income will be subjected to. So that's why we also tell people to the way you coin your contract. The moment you call it salary, compensation, wages, that's proper personal income tax. So, if, for example, if it is dividend, you can say, you know what, just pay me dividend. I would like to call my income dividend. Also, let it not just be the nomenclature. Let it have the form of what dividend is. Then the final taxes on that is just going to be WHT. Okay.
Sorry, I have like.
No problem.
I'll just ask one, allow other people to ask. If there are no questions, I'll ask the other one.
Okay.
I wanted to touch on tax havens. What are tax havens? What do they offer? You know.
Okay, pretty much it is just maybe situating your business in a country or a place in a country where taxes are minimal or taxes are not even applicable. And I think there are some countries like that.
Cayman Islands.
Yes. So, but you had there are so many things to factor. I mean, you're in Nigeria. You want to go and situate your business there. There are so many things to look into, but people do it. I mean, in fact, we have big companies that while they have some company in Nigeria, I'm talking about big corporations, they have some businesses here, they pay their regular taxes, but majority of their businesses are incorporated in those countries. Yeah. So it's something you might want to look into, but then you also have to consider, there's so many factors to consider outside of just not paying your taxes. Okay. Any more questions?
Yes. Well done.
Okay.
When you were talking about the percentages and you said the first 800,000 naira is non-taxable, then the next 2.2 is about 15%.
Yeah.
For people that earn a salary and is the company that remits the taxes, how is this calculated? Because taxes are paid monthly. So I wanted to know, like, the percentage is yearly and then it's spread over 12 months.
Yes.
Then that's how they decide, the first 800,000 naira, they're not going to pay taxes on it and all of those things like
Okay,
that.
so this is annual, right? But in calculating monthly, you just divide by 12. That's pretty much it. Okay. Okay.
Good morning.
Good morning.
So my question is, for companies that pays profits over the year annually, so are the staff supposed to be taxed again after the profit has been shared? After the salary has been taxed, the profits been taxed again?
Yes. So because at the point of it getting to the employees, it now becomes their income. While the company has done company income tax, that's separate. So now you've enjoyed the money. It came to you now is income. So you now pay your own personal income tax on that amount. I understand, but that's the way it is. All right. Any more questions? Any more questions for me? Okay. Sorry. Yeah. Yeah. Thank you.
Thank you very much, Ma.
You're welcome.
I enjoyed that session. I wanted to find out, for those looking to start maybe NGOs or corporations, you mentioned earlier about personal income tax and having your personal tax identification number. Does that still apply, or would that be relevant at some point?
Sorry, I can't hear you.
I asked that you mentioned or talked about personal task identification numbers.
Yeah.
And having that ready or available. I'm saying for those who want to start corporations or NGOs, would that have a place in the future going forward, or would that be relevant at some point?
Okay, so NGOs also get an identification number. So it's just, you're pretty much registering a company, right? But you're just registering it as an NGO. You still have an identification number, and it's different from you as a person having your own tax identification number. So while your NGO might not be paying taxes based on the nomenclature or what the business is all about, you as a person, if you enjoyed an income, you're expected to pay personal income tax. Does that answer your question? Okay, thank you. TWT.
I have two questions, but very short and very quick. So the first is the compensation for loss of office, which you said the threshold is now going to be 50 million. Is the rate still going to be 10%? Because I know currently it's 10%.
Yes, it's still 10%.
the same 10%.
Yeah.
Okay. Then the small companies, how do they now define small companies?
So small companies are still companies whose annual turnover is lesser than 25 million. Yes. Okay. I think, okay, Yomi, you have a question. Ha! Okay.
Sorry, I just. Okay, so TWT, so I wanted to mention that it may be changed though, because it's currently with the Senate and all that, and they are planning to change it to about 100 million actually. So there's not going to be medium company like she said, but they've now increased the threshold such that if you're captured within that that space, 0 to 100, you're still going to be exempt. But anything above that is then going to be taxed at 30%. And then, sorry, for the tax haven, I just wanted to mention that what we've seen the government do is also that if you are in a situation where you don't pay taxes, if there are also incentives that apply to other companies, it also will not apply to you, right? So, because you are not contributing to the to the profits, you can't get any benefit and all that. Yeah, so that's it.
All right. Thank you. But I actually doubt it's been increased to 100 million. You think so? I doubt. Okay. All right. Thank you so much for your time. I really appreciate this. I hope you found this session interesting. You feel free to reach out to me if you have any questions after. Thank you.